Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be covering what in my opinion is an extremely undervalued penny stock. They operate in the Canadian oil and gas sector. They offer specialized rental equipment, and I'm really excited to walk you guys through my bullish thesis on this company because I believe in the sector overall, and I think this could be a great buying opportunity at these current levels. Now the company name is Enterprise Group. They trade on the TSX under the ticker symbol E, and in today's presentation we're going to do a deep dive analysis on their business model. Now before we get into it, please take a second, you guys, hit the like button. It's a huge help to both myself and the channel. If you're not already subscribed, McNallie Money, feel free to do so. And let me know in the comment section below if you've heard of Enterprise Group, if you're currently holding shares, and how you think they're positioned for growth moving forward. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we're going to be covering a company by the name of Enterprise Group. They trade on the TSX under the ticker symbol E. Now this company is super exciting for a couple of reasons. Now oil and gas is a sector that I've really been looking at closely over the last couple of months. We've seen a tremendous turnaround in the price of oil, and a lot of companies involved in this space really haven't reached the highs that they saw prior to the onset of the pandemic. Now Enterprise Group is really involved in the oil and gas space. They offer specialized equipment rental to a variety of blue chip oil and gas producers, which we're going to talk about later in the video. Now this one's super exciting for another reason, and the big one is really valuation. As you can see here, market cap on this guy is about $15 million, so a micro cap company. It probably is the smallest stock we've talked about in terms of market cap on the channel. They've got about 48 million shares outstanding, and as you can see, based on close on January 20th, the company trades at 31.5 cents Canadian. Now with that being said, and as you probably saw in the thumbnail, the company has been on a nice run, so it's up over 40% in the past year. But when we look at the actual book value of the equipment, or the value of the specialized machinery and assets that this company has put together, it's actually quite a bit higher than the actual market cap of the company. So the equipment itself has been appraised between $45 to $50 million. And for that reason, I definitely feel like you're getting shares at a deep discount to fair value for this company. Now, in addition to all of that, oil and gas as a holistic sector has really been on an uptrend here. We're expecting a lot of big quarterly results from the major players in this space over the next couple of weeks. And I think that's going to be a major catalyst, along with the inflation that we're seeing across the world right now, for a lot of the companies involved in this space, or for companies like Enterprise Group that support a lot of these oil and gas producers. Now in terms of video format here, we're going to jump over to the Enterprise Group website. I'm going to take you through their investor presentation, do a deep dive analysis on this company. As you can see, currently there's 4 main components or business units within Enterprise Group. So Hart Oilfield Rentals, Westar Oilfield Rentals, Westar Power Division, and Arctic Therm. Now we're going to talk about each one of these in more detail, but before we do, I wanted to give a quick high-level synopsis of the company. Enterprise Group is a growing consolidator of specialized rental businesses. Since inception, Enterprise Group has maintained a strong vision to be the largest specialized equipment rental organization in Western Canada. So they go out, they find businesses involved in this space. They then purchase those businesses based on a variety or grid of prerequisites that we're going to look at again later in the presentation. And then they offer these specialized rental units out to various different oil and gas producers to generate various different forms of revenue for the business. Now, as we continue to scroll down here, you can start to see a bit of the definition of some of the equipment that they offer. So Enterprise Group provides specialized equipment in the build out of infrastructure for energy, utility, pipeline, and transportation industries. So they are involved or service a variety of different industries. The innovation and expertise of our operating companies have distinguished them as best in class to, again, that blue chip customer client base. Here you can see the asset value, so significant asset base, nearly $50 million, of which includes a fleet of well site modular combo equipment, specialized heating units, tunneling equipment, and other heavy equipment pieces that may be needed by these various different companies in these industries. Now, in terms of the company's vision or growth strategy, Enterprise Group continues to successfully execute its strong corporate mandate to be the largest specialized equipment rental and service organization providing critical site infrastructure and services primarily in Western Canada. We're going to look at a map of their operations next up here. As the economy regains further strength, development activity in the energy services and specialized infrastructure sector is expected to marginally increase. And that's what we're really seeing, is that return of activity and investment into the energy sector. No matter the economic climate, the Enterprise Group of companies are poised and scalable to address further industry growth. Prospects of continued infrastructure spending, which we just touched on, has given Enterprise the opportunity to implement its aggressive growth strategy by acquiring accretive and complementary best-in-class assets. So again, they're on the search to fold in additional companies when and where it makes sense. Now, in terms of the service footprint, you can see they primarily operate in Western Canada here, so mostly in Alberta and a little bit in BC. Here's the various different business units. So you can see their base of operation. Hart, they've got 4 locations. Arctic Therm, they've got 4 locations as well. Enterprise Group's corporate office is located in St. Albert, Alberta, and then they've got the Westar location, which is based in Fort St. John, BC. And if you're familiar with oil and gas operations, this is really some of the most popular areas or formations in Canada, as we're going to talk about a little bit later in the presentation. Now, in terms of the value proposition to investors or prospective investors in Enterprise Group, there's really 3 key priorities or pillars that the management team wants to identify. So number 1 is a reliable business model. Again, they acquire profitable, specialized businesses that focus on that Western Canadian hub of activity or operations. They utilize expertise, existing relationships, access to capital, and existing businesses to realize the potential of acquisitions. And now that they've assembled this portfolio, they can expand their service offerings, accelerate organic growth, create cost synergies, and really cross-sell between the various different business units. And that actually bleeds really closely into the second point here, which talks about this attractive growth profile. So a demonstrated track record of acquiring complementary businesses at accretive valuations and delivering results post-acquisition. So a lot of the companies that they service require multiple different pieces of equipment or multiple different types of solutions. And because Enterprise Group has these various different business units, they're actually able to service these companies from end to end with a variety of different asks and outcomes. Now, I mentioned they operate in Western Canada, again, located in some of the most active regions for oil and gas production in North America here. So those include the Montney, the Duvernay, Cardium, Viking formations, and the oil sands district. So that's really where the majority of oil and gas production comes from, at least in Canada. And they're really making a push into the natural gas to electricity space, which allows for mobile power supply for these clients. And this is really a great way for a lot of these companies to meet their ESG goals, environmental, social, governance goals, because it drastically cuts down on emissions, increases overall safety, and leads to cost reduction. So this is actually taking natural gas or spare natural gas and converting that into electricity that can then be used to power or partially power the operation itself. And the final point here, or really the culmination of the other first 2 points, is creating shareholder value. So integrated and synergistic services provide stable and diversified cash flow. So various different revenue streams like I talked about in the intro. And a balanced position providing specialized equipment and services for energy, pipeline, and construction industries presents the optimal path for increasing shareholder value. So the things I really like here, it's a rental model, you guys. This is recurring revenue. They've got various different industries that they service, and they're continuing to add new businesses or business units that complement the overall portfolio. And speaking of that portfolio here, this is a high-level summary of the various different businesses. So Westar Power Division, this is really focused on that conversion of natural gas to electricity, which again provides mobile power supply to the clients. This, as a result, achieves serious reductions in emissions, increased safety, and significant cost reductions because they're able to recycle that spare natural gas, and again helps with some of those emission goals. Now, second on the list here is Westar Oilfield Rentals. This is the one that's based in Fort St. John, BC. This really fulfills a multitude of equipment-related needs for a variety of top-tier energy producers, which we're going to look at in a second here. Arctic Therm is the third business unit. They're focused on providing heating solutions, as the name would imply, and they have advanced and patented flameless heaters that can produce a variety of thermal outputs for various pipeline requirements. Now, the fourth and final business at this point in time is Hart Oilfield Rentals. This is a full-service oilfield site infrastructure company, and they focus on providing site services and custom equipment rentals to Alberta energy producers by harnessing their portfolio of over 20 patented designs. Now, with that being said, I wanted to dive a little bit deeper into each one of these business units, again, just to give a feel for the service or product that's actually being offered. So Westar Power Division, the big one here, you guys, is you can see they're actually able to offset traditional power methods, so traditionally diesel generators, which are located on site, with natural gas to electricity power units or mobile power stations. And as you can see here, they're actually able to eliminate diesel fuel usage by up to 5,000 liters per day, which is a significant impact on emissions and overall costs to the site. So this is an image here of what one of these natural gas power generation systems looks like. And if we continue to scroll down here, you can see another view of their fleet. And as mentioned here, Westar's extensive fleet of rental equipment ties seamlessly into the natural gas electrification grid, optimizing power usage and again, reducing fuel costs dramatically at these various sites. The benefits of a full-service rental provider are broad in scope and translate immediately to drastic cost savings. So the companies or customers that are renting these products don't actually have to invest upfront, and they can immediately see the cost savings because they can offset those diesel or traditional power generation systems. Now, in addition to the actual power generation system, they also include the distribution panels, a variety of lighting options or solutions as well, and ensure the setup and all the various cords feeding this system are positioned safely and strategically around the perimeter of the site. So it is really a one-stop shop for all of your power needs at these various locations. Now next, we have the Westar Oilfield Rentals. So you can see some of the products being offered here. Highly regarded full-service oilfield site infrastructure business, specializing in natural gas and diesel-fired power generation. And you can see they're strategically located in Fort St. John, BC, which is a critical area in the development of Western Canada's LNG industry and the location of a major hydroelectric dam project. Now, they do have a second location as well, which is also in BC, and that was established in the first quarter of 2020. So moving along here, we now have Arctic Therm. So this is the heating specialized company here. You can see they really service pipeline infrastructure companies. They use portable equipment and proprietary technology to provide efficient and flameless, so very safety conscious here, heating solutions to really address the extreme climate challenges and drastic temperature changes we see in Western Canada. And the thing I wanted to call out here, you can see they serve a number of different purposes, so dehumidifying, confined space entry, plant and facility shutdowns, and vessel coating and curing, but they've got a fleet of over 200 units within this business unit. And last but not least is the Hart Oilfield Rentals. This was acquired back in January of 2014. This is a one-stop oilfield shop for site infrastructure, which include things like modular buildings and lifts along with lighting. And they've actually got over 2,500 pieces of equipment designed to provide that full suite of on-site infrastructure and support horizontal drilling and completion operations. So as you can see, a real variety of businesses here, and I thought this slide was important to throw in because this is really talking about the criteria that Enterprise Group uses in order to make these strategic acquisitions. And there's a couple additional companies listed at the bottom here, which they've actually sold off for a handsome profit that we're also going to talk about. So there's 4 key components here. First up would be identification. So finding profitable private businesses within our existing industry or geographies or areas of operation. They need to have a strong operational and financial track record of serving these high quality clients that have come accustomed to Enterprise Group solutions. Now, after identification would be the evaluation step. This is really focused on finding profitable investments and understanding if they can make these acquisitions at attractive transaction prices. After those 2 steps would come integration. Now this is really important. They really try and utilize incentives to retain key talent or executives within these existing businesses. So they really do focus on keeping that knowledge base and those existing relationships identify and implement synergies with the existing business units, and then deploy capital to fuel growth when and where it makes sense. Now that leads into the fourth point here, which really talks about that growth, where they can actually leverage existing relationships, existing operational expertise, and focus on growing top-line revenue, EBITDA, and various other opportunities that may present themselves. Now, under the disposition history, at the bottom here, you can see two different businesses. So this one, TC Infrastructure, was actually acquired in 2007. They paid $12 million, or at that point in time, a 2x multiple of trailing EBITDA. The company was divested or sold off in 2016, so roughly 9 years later, for $20 million. So they made $8 million simply off the sale of this business. And over the 9-year course of ownership, TC actually accumulated $27 million in EBITDA for the enterprise group. So they made a bunch of money off this company while they owned it, and then they sold it off for $8 million more than they paid in 2016. Now, same situation here with a company by the name of CT Underground, purchased in 2013 for $12 million, or a 2.1 multiple of trailing EBITDA, then divested in 2018, so 5 years later, for $20.6 million. So another almost $9 million profit in a few years of holding this company. And over the course of ownership, so the 5-year period that Enterprise Group actually owned this business, they generated $18.4 million in EBITDA for the greater organization. So this really speaks to management's experience and ability to identify profitable investments and negotiate these deals in a way that's profitable for Enterprise Group and their investors. And if you take a look at the executive team or the group responsible for these negotiations, you can see a long track record and history here. So Leonard, who's the president, CEO, and chairman of Enterprise Group, has over 3 decades of experience managing public companies engaged in various different industries, including real estate, construction, natural resources, and exploration. Desmond, who's the senior VP and corporate secretary, again, 30 years experience building out various different businesses. And Warren, who's the CFO of the company, again, 25 years experience in the financial sector or space. So these guys have a real eye for acquisition targets and know how to go through the process to make accretive acquisitions and generate value for shareholders in this organization. Now, I mentioned earlier in the video, Enterprise Group works with a variety of blue chip clients or customers. And if you take a look at the list here, you guys, these are some of the biggest and most well-known companies in their respective industries. So Tourmaline, Synovus, Whitecap, Chevron, Suncor. These are the companies that are really attracting a lot of investor attention right now. And if you look at the free cash flow that some of these businesses are starting to throw off, you can see exactly why that attention is so well deserved. So I really feel Enterprise Group as a service provider to some of these blue chip clients is a huge catalyst for the company. And I think we're going to continue to see major growth in this sector for years to come. So to close things out here, you guys, I wanted to give a quick financial snapshot of the business. This is really one of the major reasons, so when we're talking valuation, why I think this could be such a great potential investment if you're looking for exposure to the oil and gas or energy sector. So as you can see, the 52-week share price range has been all the way down to 17 cents or about 33 cents on the high end, which based on where we're at right now gives a market cap of about $15 million Canadian. However, if you look at the equipment value itself, it's closer to about $45 million. So that gives an enterprise value on Enterprise Group of about $27 million Canadian, or an NBV per share or net basic value of nearly 70 cents. So you're getting shares right now at a significant discount to the value of the assets of the actual business. Not to mention all of the growth that's going to be going on in this sector moving forward. Now to close things out here, I wanted to just revisit some of the investment highlights or my bullish thesis around Enterprise Group. So as we've discussed, a proven leadership team with impressive track record of identifying undervalued businesses and making acquisitions that add value to the organization, assisting clients with their ESG or emission-related goals. So this is going to be a major trend in Canada and across the world in years to come as governments and people in general want to push for cleaner energy. They've got new avenues for growth and various different revenue streams. So natural gas to electricity is one of those revenue generation opportunities. Management actually owns 33% of the company, so a huge percentage of this organization is held by insiders. About a third of the overall shares, meaning only 2/3 of shares, are available for the general public. And through their recent NCIB program, which is normal course issuer bid, they've actually bought back or repurchased 7 million of their shares, which represents approximately 15% of the overall float. So they're buying back shares. A large percentage of the remaining shares are held by insiders. They're trading at a deep discount to the value of their underlying assets, and they've got that proven track record of identifying businesses and purchasing them for very attractive prices. So for those reasons, you guys, I definitely think Enterprise Group is worth a look. This is one I've seriously considered purchasing. It's on my watch list, and I'm starting to get more exposure into the oil and gas space. I think this is a perfect way to play this sector, and I think this company offers tremendous upside over the next couple of years, especially if management can continue to add new business units and make accretive acquisitions. So that's it for today's video, you guys. Please leave a comment in the section below. Let me know what you think about Enterprise Group, if you've heard of this company before, and how you think they're positioned for growth over the next couple of years. If you're still watching the video at this point, hopefully you found some value, so make sure you hit the like button before you leave. If you're not subscribed to the channel, McNallie Money, feel free to do so. And with that being said, thanks so much for watching, and have a great rest of your day.